If you've had fantasies about choosing the color of your new Lamborghini from your cryptocurrency investments, you're not alone. We've all seen the sensationalized headlines of new traders who became millionaires from investing in Bitcoin, Dogecoin, and others by buying in early. I'm still trying to figure out what I did wrong there. Whether you're investing in crypto or more traditional investments, it's important to understand the differences between strategic trading and investing versus gambling. We're going to cover 5 differences between investors and gamblers in this video so that you can make smarter decisions when managing your cryptocurrency investments. And stay tuned to the end of the video, and I'll also be giving you guys some tips on how to get free cryptocurrency and stocks to add to your portfolio, because free money is the best investment. Before we begin, quick disclosure here. I am not a financial advisor and none of the info in this video should be taken as financial advice. So let's get started. The first difference between a cryptocurrency investor and a gambler is that investors are educated on what they're purchasing and why. This means taking the time to learn and really understand each cryptocurrency project you're going to put your money into. If you have no idea what the cryptocurrency's usage is in simple terms, then you're most likely taking a gamble on it. And I get it, we all want to make a quick buck. But remember, places like Vegas were built off of the backs of people that gambled and lost. One thing you can start doing today is to understand the high-level purpose of the cryptocurrency through the website and the white paper. You should be asking yourself if this use case seems sustainable and valuable to society or a specific problem. A good example is Ethereum. Ethereum has many use cases that solve real-world problems in the decentralized finance space and beyond. Any coin that's based on some random tweet you saw is probably not a safe bet. Listen, I love animals as much as you, but you have to understand these smaller coins like Floki, Sheep, and yes, even Doge are high-risk investments that you're trading on speculation. I can't stay away from you though, Andy. And that brings us to our next point, which is diversifying your investments. If you just can't stay away from that cute, trending, animal-inspired crypto project, then you need to be smart about how much you're willing to gamble on it. And yes, buying into anything without a good use case is a gamble. These smaller coins are high-risk investments that you're trading purely on speculation. Diversifying your crypto portfolio can prevent a lot of heartaches. If you decide to throw away your entire investment into one coin and that coin turns out to be a rug pull, then you might be crying yourself to sleep at night. What a smart investor will do is buy into multiple coins with valuable technologies and teams behind them. This helps to minimize your risks, and smart investors are all about minimizing risk. Speaking of minimizing risk, let's talk about taking profits and setting up a stop loss. There are a few different ways of taking profits depending on your investment strategy. And if you'd like a video on how you can do that step by step, just leave me a comment below so I can prioritize that video for you guys. A stop loss is simply a way to minimize your risk by triggering an automatic sale when your cryptocurrency goes below a certain price. Let's say I purchased one Bitcoin when the price was at $30,000. I might set a stop loss at $25,000, so this helps ensure that if the market is falling quickly, I'll only lose around $5,000. There are different types of stop loss triggers that you can set, and most of the exchanges, such as Coinbase, support these. If you aren't setting up triggers for your investments, then you're taking a gamble if the market decides to fall quickly. Even the thought of a market crash might trigger some anxiety. We're humans. Well, most of us are. That means almost all of us are vulnerable to emotions. However, a gambler will typically chase the market, overtrade, and make biased decisions. A smart investor will follow their investment strategy, have patience, and not rush the process. If you've invested in cryptocurrency long enough, you're going to endure some losses at some point. A gambler will typically get emotional and throw money back into the market to try and recoup losses, which typically turn out to be illogical trades. And just an FYI, no one likes an emotional, all caps raging keyboard warrior. An investor, on the other hand, will take a deep breath and focus on their risk management. opening high risk to reward positions to cover those losses. If you guys like free stuff, I've included a link in the description, which is an updated list of major cryptocurrency exchanges and the offers they're giving away for signing up. I would highly encourage you guys to take a look at that, since these exchanges are all competing for your money right now as cryptocurrency is gaining adoption. You can deposit as little as $100 and get free stocks in crypto from using the links provided. And yes, it's always a smart decision to take advantage of the best sign-up offers out there so you don't leave money on the table. It can be helpful for some people to think of your investment portfolio as a business and take each trade very seriously. Successful business owners are strategic in their investments and cash flow and where they're allocating their cash because they care about the long-term success of the business. If you're thinking of cryptocurrency as a slot machine or casino game, then you're most likely gambling away your hard-earned cash. And hey, I like a good casino game every now and again too, but this is short-term thinking. If you're looking at it this way, then be prepared to gamble only what you're also prepared to lose. If you guys like this video, please share it with a friend or family member who could benefit. And don't forget to hit that like and subscribe button for more videos like this one. And quick disclaimer before we wrap up, if you want to use any of the links provided in the description, it does help support my channel at no cost to you. I work with these companies to help get you guys the best offers that you typically won't get from signing up on your own by just Googling the website. And all of my content is free, and I'm working to add as much value as possible for you. You can also show me some love by simply subscribing, liking the video, and commenting to help with my channel exposure. I hope you guys have a fun week, and I'll talk to you next time.